to redistribute the wealth. Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The expansion is still far from complete. At this early stage, I would argue that the risks of policy intervention are still asymmetric. Too little support would lead to a weak recovery, creating unnecessary hardship for households and businesses. By contrast, the risks of overdoing it seem, for now, to be smaller. Even if policy actions ultimately prove to be greater than needed, they will not go to waste.
That was the chairman's intervention. Jerome Powell, the Federal Reserve chair, just yesterday. The president tweeting he agrees with the chairman of the Federal Reserve. He's just not looking to negotiate with Democrats anymore, Tom Keene. Now offering a slimmed-down bill, piecemeal, checks for everyday Americans, very much in line with what many Senate Republicans have tried to push over the last couple of months. So the administration looking far more aligned with the Republicans in the Senate at the moment, Tom. They've dropped the negotiations, I guess, going into the election. That's the offer on the one hand. On the other, there is some post-election posturing going on now, Tom, on both sides. This is our deal. This is theirs. We'll both be trying to produce some fiscal stimulus if we win.
Absolutely. I'm watching the president's tweet out, John, 1 second ago. There it is. We are active on tweeting this morning. We'll really have to see how this develops. I'm watching the 30-year bond really as a tweet barometer, John, a 158.32. He's out here with the first tweet mentioning Marsha Blackburn, of course, of Tennessee as well. We'll get to that as well. Futures up 28, Dow futures up 229. Jeannie Zeno's with us, Bloomberg contributor, Iona College professor. Her book coming out is brutal. Boy, Jean, it's been brutal. What is a brutal part of tonight's debate you will look for?
You know, I think I'm really going to be looking for is, Harris. She's got so much support from liberals who have all the time since she was nominated thought she was really going to take it to Pence in this vice presidential debate and she was going to win. I'm looking to see if she can do that and if her prosecutorial skills really come to fruition. And for Pence, I think he's a quite underestimated debater. He was very good in the 2016 debate against Kaine. He has a background as a conservative radio talk show host where he called himself Rush Limbaugh on decaf, and nobody is better at sort of translating what Trump is thinking and doing than Mike Pence, and he's very steady. So I think the fact he's underestimated is going to help him in this debate.
Jeannie, John Farrell mentioned earlier that what's profoundly changed is the idea of an election that will string out into late November and indeed even into December. Has that actually happened when you look at the numbers? Are we back to what's going to happen on a Tuesday evening?
You know, looking at the latest NBC Wall Street Journal poll where you're seeing seniors, just as an example, 27-point lead for Biden, you would, if you went to strictly by the numbers, you would have to say this looks like it could be a blue wave, not just at the top, but down ballot, because seniors vote in much larger numbers. If Biden's got that kind of lead, if we can trust those polls, then this is going to be a blue wave. But of course, looking back at 2016 and other elections we've seen recently around the world, these polls can also be wrong and misleading. And of course, We don't vote by popular vote. We vote by electoral college. And you look at those swing states, and they are still within a margin of error in some cases. You know, Pennsylvania, not so much, but you look at states like Michigan, Wisconsin. So I would not be comfortable at this point looking at these numbers saying this is going to be a runaway. I do think Biden definitely wins the popular vote, but I think we have to wait and see what happens at the electoral college level.
Jeannie, we're always conditioned by experience as human beings and the stories we tell each other about what happened previously. I think some people would argue the polls were actually not that far off 4 years ago, just people's interpretation of what happened 4 years ago. Can you walk me through the lessons of 4 years ago and what you look at now?
Yeah, and I'd absolutely agree. You know, I would defend all my friends in the polling community. For the most part, those polls were within a margin of error, but I think as human beings, we naturally hear a number, you know, ahead by any number, and people think you're going to win. And of course, these are all based on probabilities. So I would just caution everybody to read too much into these polls at this point. Number one, they are all within a margin of error. Number two, we have people voting already and voting throughout election season. So this is not just a one-time snapshot like polls show. This is a moving target. And we've seen the amount of stories that have broken in just the last week, let alone what's going to happen in the next 4. So I think those are two lessons to take away. These are snapshots in time. This is an ongoing changing story, and voters can change their minds at the last minute. And of course, third, again, we vote by electoral college. It doesn't matter at the presidential level so much what happens in New York or California. It matters what happens in those 6 to 8 swing states that will decide this election.
Jeannie, what's more important for Kamala Harris, to energize the base or to convince moderates that she's not as liberal as the Trump administration is trying to paint her?
I go with the latter. I think to, you know, not to lose any of the liberal support and energy, but I think to convince moderates that she is not this liberal progressive who's trying to, you know, who's the puppeteer of Joe Biden. Because, again, this is an election that's going to be decided by those undecided voters in swing states. They've got to get them out and to their side. So I think tonight for Harris, the number one thing is do no harm. Number two is to continue to make the case to the American public that the Trump administration cannot be trusted to successfully get us through economically, socially, health-wise, and in all other ways this pandemic. And if he can't, you know, the idea being if President Trump can't protect himself and his staff at the White House, how can he protect your family? I think that's the message she's got to send, but she's got to be very cautious she doesn't come across as insensitive in making that case.
Jeannie, great to catch up. Thanks for your view this morning. Jeannie Zana there, Bloomberg contributor and Iona College professor. A little bit later this morning, in about 8 minutes' time, we'll catch up with the former mayor of New York City, Rudy Giuliani. Looking forward to that conversation, Tom. Headline cross out of Bloomberg, this from the Financial Times, just quickly. The UK to launch a travel task force planning to test for COVID for people arriving from abroad. We were talking about this about 20 minutes ago, Tom.
John, you've been talking about this for 20 months.
About 7 months in, 8 months in.
Yeah.
Government's finally looking at doing this. And money's not the issue.
I mean,
they've thrown enough money at the problem.
But you've talked about this. You go out to Heathrow. Do I have this right, John? You suggest everybody gets tested in, everybody gets tested out, right?
It's what's happening at a load of airports around the world already, Tom. I would also suggest that on a transatlantic flight, look at what other countries are doing. They're looking at getting a test before you fly. You travel with a certificate. You get tested when you land. You get tested a week later, perhaps. Yeah. There are testing regimes around the world doing these things already. For some reason, places like the United Kingdom just not keeping up. And as I say, Tom, money is not the issue. They're throwing a load of money at this. They're just not throwing money at testing for some reason. And I can't get my head around that.
It's absolutely fascinating, and it's a unique character between the United Kingdom and the U.S. sort of leading up here, who's doing the worst practices involved. John, look at these markets with equities lifted in the 30-year and the 10-year come out as well to new highs, 0.7785 on the 10-year, John, because we quote to 4 digits.
We do. You're so happy about that. Equity futures up 27, session highs up 0.8% on the S&P 500. The euro firmer 117.68, up 1/3%. Up next on this program, a conversation you do not want to miss with Rudy Giuliani, the former mayor of New York City. That is next from London and New York. This is Bloomberg Surveillance.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From London and New York, this is Bloomberg Surveillance for our audience worldwide, live on Bloomberg TV and radio, alongside Tom Keane and Lisa Abramowitz. I am Jonathan Ferro. Let's get some equity action for you. Around about 60 minutes away from the opening bell in New York City, futures with a bid up 26 on the S&P 500, advancing 0.8%. In foreign exchange, 117.67 on euro dollar. And just a quick sneak peek at the bond market. Treasuries lower, yields higher. At the long end, a 10-year down, yields up 4 or 5 basis points to 0.78%, around about a basis point off the high in Tuesday's session, Tom. So we're pushing up against those levels again this Wednesday morning.
John Farrell, Lisa Abramowitz, and Tom Keane, we welcome all of you worldwide. We welcome all of you across this nation. Rudy Giuliani is the 107th mayor of New York, out of Brooklyn by way of Garden City South. He is widely credited with law and order at a different time and place for a more fractious New York City. He's gone on to some success. He's gone on to a lot of debate as well. We greet him here at 76 years old and well-preserved. Rudy Giuliani, I got to get right to it. On Fox the other night, you made national headlines with a lot of coughing as well. How are you, and have you had a test recently?
Well, let me start with the good news. Yeah, I had a test recently. The day of that time that I was coughing. I coughed twice, actually, and I was clearing my throat. I had a test maybe 2 hours earlier. It came back yesterday, and I'm negative. That's the second one I've had since I was with the group in the White House that, unfortunately, most of them came down with it. I feel very bad for them. I almost feel a little guilty, I guess, but I was one of the few, along with Jared and Ivanka, that didn't. But so far, I don't, and I'll go back and get tested again on Friday, and then I'll be out of the woods, I hope. I mean, you got to be very positive about it. Also, I'm not that nervous about it. I know that if it does happen, I know exactly what to take. My doctor has already prescribed hydroxychloroquine, which I'm taking every day now for 5 days as a prophylactic.
Your doctor has prescribed that to you. Has a doctor prescribed that to you, or have you told the doctor you're going to take this controversial medicine?
Oh no, the doctor has treated 2,500 patients who had this illness. Believe it or not, the man is a genius. He invented the Zelenko protocol. And he's lost only 2 patients.
Right. Rudy, you are the personal confidant to the president. He's tweeted twice this morning. He is in recovery. He wants to get back to the Oval Office and work. Have you spoken to him in the last 24 hours? And what are you going to advise him to get this campaign back on the rails?
Well, I mean, what he's doing, which is he's got his surrogates out all over the country, making speeches, making talks. He is he's communicating from the White House. Communicating what he has to from the White House, and as soon as he can, he'll be back out on the road himself. But he's got something like 500 surrogates in all different parts of the country, particularly in the key battleground states, who are speaking for him.
Okay, but I'm going to go do Rudy, I don't mean to interrupt, but look, Mike Pence has the most important vice presidential debate tonight. You and Mike Pence have the president's ear. What are you telling him, and what is Mike Pence going to do tonight to get the campaign on the track to get the marginal voter that the president has clearly lost?
No, he hasn't clearly lost it. You're reading polls that were the same polls. He was behind by, if I take you back 4 years, we were 3 days after the Billy Bush revelations, and he was being counted out at this point, and he was about 18 points behind, 17 points behind. So, I mean, I understand what's wrong with the polls. They oversample Democrats. There's anywhere near a 5 to 6 point differential in favor of Trump that's not there because you don't measure enthusiasm. His enthusiasm level is still 3 times Biden's. The Biden voter, half of them are voting, just because they're Democrats. The other half are voting out of hatred for Trump. The Trump voters are voting because they love him. And because they realize he's been one of the most consequential presidents ever. And they are very afraid of a socialist state because they believe that Biden is impaired and not able to really handle the.
Oh, come on, Rudy. I mean, John Farrell.
Forces.
Rudy, John Farrell wants to get in here. Do you see evidence that the former vice president is impaired?
Oh, absolutely. 100%. Not only that, I've had doctors look at him, and I've done a podcast on it. Rudy Giuliani's commonsense.com. Go look at it. The two doctors will compare speeches Joe Biden gave 5 years ago with speeches he's giving now. He loses his train of thought in the middle of a sentence.
Yeah, but so do I. Rudy, so do I. John Farrell. John, jump in here.
No, you don't.
Oh, come on. I lose my train of thought on an hourly basis. John, jump in here.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Now, Joe Biden, I pledge allegiance to the United States,
Rudy.
under guard.
John, save
the
us
rest.
here. John doesn't.
How about he couldn't get? Those aren't. Listen to me. Go get the Let's not even argue about it. Go get DSM-5. You know what that is? DSM-5. You don't. It's the psychiatrist's handbook. Go look at the 10 symptoms of dementia. He's got 8 of them. One of them is losing the train of thought frequently
John,
in the middle of his
save me here. John doesn't
Another
know
one
the
is
Pledge
having
of
trouble with
Allegiance.
numbers. 3030303030.
Right.
No, he doesn't remember it.
Yeah. John, jump in here,
No,
please.
he doesn't remember it because he has dementia. It's a disease. It's an illness.
Hold on a second.
If he doesn't have it, nobody has it.
Please, let's move on.
this
Okay,
disease
honestly,
with
Rudy,
friends.
we're talking about something that is peripheral to
Honestly,
an issue that is much
you are
more important
depriving
right
the
now,
American people
which is the
of a
idea
fair
that
chance
we're in
to
a
hear the
pandemic.
truth,
Rudy,
which
please.
is disgraceful.
Please.
It's
Please.
disgraceful
Rudy,
that you're doing
please.
this.
Honestly.
You're cutting me off in the middle.
Listen.
No, honestly,
right now,
you are being obstructive. I am talking about facts. I'm talking about a psychiatric textbook. You don't even know.
Listen.
You don't want the American people to hear that the guy running for president has an illness. It is clear. It's obvious. Go read DSM-5. Look for the symptoms of dementia. He's got 8 of them. And don't tell me, Rudy. That is the truth. I know it's uncomfortable for you, but it's the truth.
Rudy.
He's also a big crook.
Rudy, I'm not going to sit
Rudy,
here
what, Rudy?
and go through Rudy.
Don't talk to me
Let's
in
start
that.
again.
You do not talk to
Matt
me
Giuliani.
in that tone.
Matt Giuliani.
As if what I'm saying isn't worthy of consideration.
I'm just here to ask you a question.
No. I didn't like the
focus on the
dismissive
medical
tone.
state of the former Vice President Joe Biden.
Okay, let's focus on the 3.5 million. Let's focus on the 3.5 million from one of the close friends of Putin in Russia that went to his son who's suffering from drug addiction.
Matt Giuliani.
Why would you pay 3.5 million?
Let's focus.
Why did China pay the son 30 million? The Communist Party of China. Can we talk about the things that you don't talk about? The things that you hide from the American people?
We've agreed to do an interview.
Yes, sir.
Not a monologue. Do you want to let me ask some questions?
No, I've agreed to come on so that I can tell the truth. I didn't come on to be a
Rudy,
slave to your questions.
we're doing
if they're
an
not gonna be
interview.
fair.
Mr. Farrow is going to ask you a question because that's what we do here.
Well, ask me the question.
John, ask a question of the former mayor of New York City.
But you can't stop me if you don't like what I'm saying.
Rudy.
Well, no, I just want to focus the interview a little bit. Matt Giuliani, you have direct experience in preparation with the president for the debates.
Let us see if you can answer
let's
a fair
talk about
question.
the debates. Governor Christie.
No, why don't we talk about what's not talked about? Absolutely not.
We can talk about.
The president wasn't going to. The president was debating.
Talked about in a moment.
Will you let me finish the answer?
Let me finish. You haven't even let me complete the question.
Let me.
Matt Giuliani, let's do this.
Good. I'll wait for you to complete the question. Let's see if you can ask a fair one.
I've been asking a question about the debates, sir. So let's start there. I'm not interested in getting combative with you. The debates, which you had direct involvement in to prepare the president for. Governor Christie said the president was too hot. What did you learn from those debates?
I learned that the president has to do that when he's debating the moderator and Joe Biden. And when, for months, the media has been covering up facts the American people have to know about Joe Biden, about his incredible history, his and his family's, of taking money from countries like Iraq, countries like Ukraine, countries like Russia, and basically getting 30 million or more from the Communist Party of China, with which his son has been a partner for the last 4 years. The American people don't know that because those questions aren't asked. Those things are suppressed. The reason they don't know that Joe Biden is demented is because you cut off those parts of his interviews when he loses his train of thought, as he did twice the other night. So that's my answer to the question. Next question.
Mayor Giuliani, we appreciate your time. Thank you very much for joining us today, sir. The lawyer to the president.
Thank you.
No, you didn't.
And the former mayor of New
You
York
don't appreciate
City.
my time. Boy, you're so phony.
I very much did, sir.
Thank
you very
God
much.
Almighty.
The former mayor of New York City.
You're working for the
Giuliani.
Democratic.
Thank you very much.
John, it is remarkable
Looking ahead to the debate a little bit later this evening, Tom Keene.
It is remarkable to see this, John, after the state of the city. I have the clearest memories way back, pre-Giuliani, of getting out near the Port Authority into what was, the romance of it now of a tougher New York City. But it's amazing what this guy accomplished, and to those particularly younger, how different he is now, as we just witnessed. And as you correctly said, John, a monologue well, Lisa, are you still with us? Did you survive that as a native New Yorker?
Honestly, the one thing I wanted to ask him, as he said that it doesn't worry him that much getting the virus. And my key question is this the new tactic? That the virus just isn't that big of a deal? Is that the message from the White House? That seems to be what President Trump was saying.
Well,
I don't think we're getting a very clear answer on that. And medical professionals pushing back. I do wonder, though, is that the message?
John, what's so important and what Lisa says in that insight is the president saying, well, maybe I'm immune. John, it was such a different tone from Prime Minister Johnson, wasn't it?
What an interview. Why aren't we talking about the elephant in the room? I mean, come on. That was just absolutely ridiculous in the last 10 minutes, Tom. Absolutely ridiculous. I understand Josh Wingrove is with us now, Bloomberg News White House reporter. Josh, fantastic to catch up with you, sir. Thanks for joining us today. Let's try and focus the debate. Very difficult to focus the debate if an individual that is helping you prepare for that debate conducts themselves in that manner. How on earth will this debate shape up on October 15th in Miami, Florida?
I mean, I'm a bit at a loss for words. I guess I would say that Rudy has been dieting on the same sort of feed of misinformation that the president has for some time, and they're convinced that there is conspiracy going on ways, and I think you've heard a little bit of that. Look, some news in it also was that he's on hydroxychloroquine as a preventative measure after he sat next to Chris Christie for a few days. Chris Christie, of course, has come down with the virus and checked himself into hospital. The FDA has issued a poison warning for that drug, essentially, making it the emergency use authorization. So, but touted it. So I guess back to you, but Rudy sure seemed upset. I don't know, John, you don't have that effect on me normally, but, there's always tomorrow.
What is so important here, Josh, is we saw the president come out of a very close managed theater into that first debate, and all of us, whatever our politics, saw the response, the performance of that debate. And now we see Mayor Giuliani coming out of the convenience and comfort of the bubble, particularly as personified by his many conversations with a large family of Fox properties. Fine. Can this president, from your reporting, go outside the bubble to speak to marginal voters that don't buy what we just heard from the 107th mayor?
He has not ever shown interest in doing that. And part of the collision course of this election has been the president and people around him coming out of their sort of Fox News orbit and, engaging with other media. And it often ends up like this. And we saw it with that town hall that ABC ran, 3 weeks ago, George Stephanopoulos. And Trump got a lot of questions from people on handling the virus, downplaying the virus, things that people around him have declined to raise with him, right? And so it was sort of a bubble popping a little bit for him. Now, the president continues to believe that there is a silent majority out there backing him, but I mean, poll after poll after poll don't show it. In particular, it looks like he's about to get clobbered among women voters. We're talking by 20 points. There's a poll that showed over 30 points gap among women voters yesterday. So, honestly, I guess, we'll know by November 3rd which reality is correct. But some days it just feels like everyone's looking at totally different song sheets.
Josh, there's also a question, if this is the new message out of the White House, that people are overplaying the virus, that the pandemic isn't that serious, is there an audience for that view? Are there a lot of voters who find that to resonate with them and want life to just go on and are willing to take the risk?
I mean, there are, but they're the same voter base that the president has. I mean, poll after poll after poll shows that people believe that Trump doesn't take the virus seriously enough, that they want more action, in particular around Congress. And we saw the president blow up those stimulus talks and then walk under polling to manage the virus. Like poll after poll after poll shows it. So, I think that any day that Donald Trump spends talking about the pandemic is a lost day for his campaign.
Our international audience, particularly, just got a window into a segment of the president's support there with Mayor Giuliani, and of course, the heat, the ferment rather, of those that are committed to Donald Trump. That's fine, but how does all this redound over to the Senate races? I know you're a White House reporter, but what does this tension, and particularly tension of conspiracy and ill will and almost criminal intent of Democrats, what does that mean to the many Senate races?
Well, the sort of neutral prognosticators have slowly moved the Senate race forecast in favor of Democrats. And instead of fighting this election in Colorado and Arizona, they're fighting in places like South Carolina and North Carolina, places the Republicans shouldn't really be in tight races. And so, as I say, we don't know. There's a lot of unknowns right now around mail-in voting, how many ballots are going to get rejected. So, I don't think anyone is counting any chickens before they hatch. But, the poll, certainly Democrats seem a lot less worried about this poll right now than Republicans do. And, if Democrats take the Senate, it could be a bit of a cold winter for Republicans. And we just don't know what will happen if Trump loses, right? I mean, both in terms of how quickly he'll leave, if he'll leave, but also what will happen to the party. Does he still hold his grip? I think he will, in at least some way, hold a big grip over this party, win or lose.
Josh Wingrove, thank you so much for joining us on short notice. Of course, our White House reporter, an exhausting set of days for him, Kevin Cirilli, and our team. We welcome all of you worldwide and across this nation on Bloomberg Radio and Bloomberg Television after a contentious interview with the former mayor of New York, Rudy Giuliani. We thank you for staying with us. And now maybe to something more traditional, Gina Martin Adams of Bloomberg Intelligence, our chief U.S. equity strategist. Gina, I don't know if you heard the Giuliani confab, but it devolves down to all of this politics and what it means to the equity markets. What's it mean to the equity markets, say, March or May of next year?
Yeah, I think what the equity market is going to focus on post-election are the prospects for fiscal policy to continue expanding and the offset of that fiscal policy via tax reform and increased tax rates. So I think you're going to have some give and take depending on how large the fiscal policy package likely is in a post-election environment. You probably see some of the more cyclically oriented groups in the equity market do reasonably well. But then you've got to think about the timing of how to pay for that and how to pay for the extensive fiscal policy action that we've had over the last year or so as well. And that, I think, is where we get into a little bit of a sticky point is, do we pay for it with immediate tax increases? In particular, do we see capital gains rates go higher? Do we see corporate tax rates go higher, and how fast do they go higher? Or is it more of a delayed sort of pay where corporates can adjust and tax rates adjust slowly higher, which is a very different dynamic for the equity market? And that remains to be seen. But nonetheless, I do think stocks are going to focus on those two things as the predominant ultimate outcome of the election. That said, in the short term, it's just a lot of volatility and a lot of noise affiliated with the election until we get some resolution.
I got to say, Mark Meadows coming out just moments ago, the chief of staff to President Trump, saying he is not optimistic about comprehensive stimulus. As a result, we're seeing actually yields go higher, as Tom was pointing out, 30-year yields. The interesting thing is markets are completely looking past near-term volatility, and the more that the Republicans and President Trump become entrenched in not getting a stimulus, the more they're expecting a larger stimulus support bill, perhaps come January, if the Democrats do take control. Is that going to be the narrative over the next 3 months?
I think it will be. I think January is a very aggressive timeline, frankly, just considering how long it typically takes policy to get enacted. I would expect something closer to March or April, but let's see. But I do think that it is going to be the narrative to expect persistent volatility until we get some outlook of the outcome from the election. But ultimately, if you think about how stocks should trade, we should be trading on the outlook for earnings growth over the next 12 to 24 months. over the next 12 to 24 months, it seems quite likely that we will see some form of fiscal policy enacted. Now, there's a lot of uncertainty in the short term with respect to the election, and that probably means we won't get a ton of risk-taking. And we won't get a ton of accounts putting on, highly cyclical trades in the equity market in anticipation of growth, because it's so much uncertainty in the short run, and you certainly still see that in a volatility contract. But over the 12 to 24 month period, we should see economic growth improve and fiscal policy likely swoop in with some form of stimulus, and that should help the earnings outlook.
Gina, I'm struck by also this idea that should there be volatility, the Federal Reserve will step in. That seems to be the idea that if there is not a fiscal support package passed by Washington, D.C. in the next couple of weeks, some expecting the Federal Reserve to come out and announce additional quantitative easing. Why wouldn't this recipe just be all good for risk, given the fact that it would mean more monetary support now and then even more fiscal support later, leading to just a rip-roaring rally heading into year-end?
Yeah. It is all good for risk. The problem is, in the short term, there is a tremendous amount of uncertainty with respect to the transition of political power if we do see a change in hands of administration come November 3rd. And as a result, there's not a tremendous amount of short-term tolerance for risk just over the next month. That doesn't mean that policymakers aren't going to provide the support necessary after that point in time. And I do think that investors are looking at that opportunity, but they're watching the bond market really carefully as a signal as well. And the bond market is very meaningful for driving outcomes in the equity market. If you have a consistent sell-off in the bond market and yields going higher, that is consequential for equity market valuations as well. So I do think there's a little bit of nervousness out there in the short term, offset by hope and optimism for the long-term improvement in growth.
Gina, I'm going to ask a conventional question here, which seems so odd in the tumult of the times. But Ben Laidler mentioned it in London today, which is the mystery of revenue guessing and earnings guessing as well. What's the tone of Bloomberg Intelligence right now? Are we guessing better revenues than expectations? Are we guessing better earnings than expectations? Which way does that cut?
Yeah, actually, all the way back in May, we started putting together kind of an outlook for the most likely earnings and revenue outcomes and compared our broad equity analyst expectations to the consensus expectations and found that we were somewhat more optimistic than the consensus, and that still stands as of today. Looking into 2021, I think one of the most underappreciated sort of aspects of this is you don't have to do much to do better than 2020. Without a doubt, we are going to see earnings recovery in 2021. We are going to see sales recovery in 2021 relative to the first half of 2020, simply because the economy is operating. Recall, 6 months ago, we weren't even in an operational economy. We were completely shut down. So the difference is that we are operating. We're not operating at 100%, but even operating at a 50% economy puts us in much better stead from a sales and earnings growth perspective. We get a tremendous amount of skepticism. I hear this every day from clients saying, look, you can't get a double-digit earnings growth recovery because you can't, you're not going to see an economic recovery. But the reality is we are in economic recovery simply because we have an economy that's somewhat functional. And that result of that is we're going to see likely high single-digit sales growth, and we're going to see double-digit earnings growth at least through the first half of 2021, as long as we don't shut down again.
Gina Martin-Adams, thank you so much. Greatly appreciate that on the equity markets here in a day of tumult, and of course all crescendoing towards Kevin Cirilli in Salt Lake City in this really unique debate tonight, separated by plexiglass, two vice presidential candidates with candidates of 74 and 77 out front leading their tickets. Lisa Abramowitz, we've had a huge response to our conversation and the monologue of the former mayor of New York. Lisa, I say this with immense respect to the fabric of the Abramowitz family growing up. I think you've lived in all 5 boroughs at one point. But Lisa, I'm looking at the Rudy Giuliani I know that saved New York from law and order and crime and the terrible moments. John's looking from London as someone from the Great Britain. What were your thoughts on the change in this mayor that we've observed over 3 decades?
a big change. I'll just say delicately, a large change. There has been a transformation. My question is, how can we have a conversation if we don't even listen to each other? And Tom, this is the ultimate question here. If you have all the health experts saying that this pandemic is serious, that it has a substantially higher mortality rate than the average flu, that especially older individuals are incredibly susceptible to that and don't get the same kind of health care that the president gets. How can we have a conversation if someone just says, I don't buy it, right? And I think that that's part of the issue. And yet, you know, there is a question, how is this going to read to voters? And Tom, that will be the question tonight. How does Mike Pence calibrate this message with a very different attitude than either Rudy Giuliani or President Trump?
And with the tweets that we're seeing right now, and there's been a host of tweets from the president, of the many tweets here, and he's going back and forth with many, including links to different TV programs he has an affinity with. I'm just going to go to an all-caps headline. I'm not going to editorialize this, but this is the moment we're in, particularly for our international audience. The President of the United States. Dems want to shut your churches down, comma, permanently, period. Hope you see what is happening, period. Vote now, exclamation point. In the moment, one of the tweets this morning from the President of the United States. We thank all of you for watching. It's really been an extraordinary set of hours here, and we move forward through the day. Please stay with us on Bloomberg Television and Bloomberg Radio as well. Good morning. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, you know, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Valuations, particularly, you know, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bell. All markets, I promise you. Equity futures up 27. We advance 0.8%. We begin with the big issue. Stimulus talks breaking down in Washington, D.C. The president tweeting he is instructing his team to stop negotiating with Speaker Pelosi, suggesting she isn't negotiating in good faith. This, after Chairman Spouse spent the day pushing for Congress to act.
There is likely to be a need for further support, targeted and sustained policy support. Too little support would lead to a weak recovery. The outlook remains highly uncertain. The risks of policy intervention are still asymmetric. The risks of overdoing it seem, for now, to be smaller.
According to President Trump, he agrees, offering a standalone bill for stimulus checks that will go out immediately, an offer that was in the Senate GOP skinny bill a month ago. Many of you are confused, I am too. The Washington Post reporting that on a call yesterday with President Trump, Senate Majority Leader Mitch McConnell suggested that Pelosi, quote, was stringing him along and no deal she cut with Mnuchin would command broad GOP support to pass in the Senate. It's becoming clearer that the biggest gap in talks wasn't between Mnuchin and Pelosi, but arguably between Mnuchin and McConnell. Welcome to Square One. We never really left. Let's bring in Kevin Cirilli, Bloomberg Chief Washington correspondent, joining us from Salt Lake City, where we will have some vice presidential debate a little bit later. Kevin, the fiscal talks front and center for this market. What happened in the last 24 hours?
New developments just within this last hour as Mark Meadows, the president's chief of staff, saying on Fox Business that reportedly they are now looking at standalone bills that he has spoken with Treasury Secretary Steven Mnuchin as it relates to standalone piecemeal bills. However, that is a non-starter with Democrats. That is a non-starter with Speaker Pelosi. And President Trump, within the last day, going on or posting rather several tweets as it relates to fiscal stimulus talks and backing away from a deal, saying that it's not going to be until after the November 3rd elections until there is a deal to be had on fiscal stimulus. Now, from an investor standpoint, what this means is that there is still going to be stimulus. It's just not going to happen before the election.
Got a little glimpse, Kevin, of the preparation for debates with the former mayor of New York City, Rudy Giuliani, a little bit earlier. Very competitive. I'm just wondering, Kevin, tonight, if you expect it to look anything like what we saw a week ago.
I don't anticipate that this will be like what we saw in Ohio. I talked to several sources now on the president's reelection campaign, as well as on Joe Biden's presidential campaign. And what they said is that they are looking forward to having a more substantial debate. This is a deeply conservative state, one where Vice President Mike Pence is sure to have a political ideological home. We should note that his task is to, one, defend the coronavirus response from the administration. He was a leader in that. And two, to also shore up some of the president's base who is a bit concerned about the president's fiery rhetoric. For Senator Kamala Harris, this is a national reintroduction of sorts, someone who is likely going to be at least one of the major leaders within the Democratic Party for years to come. She also has to clear the commander-in-chief hurdle. Any vice presidential candidate has to pass that heartbeat away from the president test. And with health at the forefront of this race, that is something that she is going to have to speak to as well.
Kevin, thank you, sir. Great to catch up. 27 minutes away from the opening bell. Equity futures up 25, up 0.75% on the S&P 500. PIMCO's Joachim Fowler expecting a cyclical recovery with some economic scarring. He goes on to say the following: the first half of our secular horizon is likely to be characterized by the long climb to recovery with above-trend growth for a couple of years as the global economy emerges from the deep hole of the COVID recession. On this report, right here first on Bloomberg, I'm pleased to say that Joachim Fowler joins us right now. Joachim, always lucky to catch up with you, sir. Let's just talk about the outlook here and how you plug in what you expect around fiscal in the United States of America in the coming year.
Yeah, so hi, John. Thanks for having me first. Fiscal is obviously key.
And I think the events overnight are a good reminder that fiscal is not a given. I think there's a view out there in the market that whatever happens, we will get massive additional fiscal support. And that may well be the baseline. So after the election, depending on the outcomes, we will probably get more fiscal support. But again, it's not a given. There are political constellations where that may not happen. And so I think that poses significant risks over the not only the near term, but also the medium and longer term outlook. Fiscal policymakers went all in this year, supported by central banks. Again, many people in the market expect that this is, the new world and that this will continue forever. But there is a significant risk that we end up again with either political gridlock or that the austerity cult makes a comeback, either in the US or in Europe. And so there is not only upside risk to growth and inflation, there are also downside risks that I think markets have not fully factored in at this stage.
So we can get to the markets in just a moment, but just talk to me about how difficult it is to have a projection at PIMCO, to put together some kind of forecast. Do you just have a band now, or do you actually have a forecast?
We have a band, we have a scenario, or we have several scenarios, and the bands are very wide. And I think the most important thing, and we discussed this at our recent secular forum, which looks more at the next 3 to 5 years rather than just the next year, I think it's extremely difficult to have any confidence in any particular baseline forecast. Our story is that we will see escalating disruption over the next few years. I think we all got used to dealing with disruption over the last few years already, but I think what this crisis has done, what the pandemic shock has done, is it amplifies several of the secular disruptors that we and others have been emphasizing for some time, right? China's rise, populism, technology, these are all things that are disruptive and have been accelerated due to the pandemic shock and the policy responses. On top of that, we've had these weather-related events this year, which have put even more of a focus on climate-related risks, which is another major secular disruptor. So when it comes to forecasting, I think it's much more important to think in scenarios and think about the things that could go wrong or could go right, rather than writing down any precise path for growth and inflation.
So I understand, Joachim, why it's so difficult right now to forecast the cycle and the recovery. Why is it easier to sit here and say that the return profile of markets will be different to what we experienced in the last 10 years if we don't have much conviction of what the recovery will look like?
Yeah, so I think the one thing we can say is that the environment of high returns and low volatility of the last 10 years is really behind us. And the next, say, 5 years will look very different. A couple of reasons for that. The first one is that valuations are very high, both in equities and bonds. Both do not look cheap. They look relatively expensive. And on top of that, we have this potential for escalating disruption over the next few years, which will lead to more volatility. So while we all got used to a world where you have high returns and low volatility, I think the future will be one of lower returns, much lower returns, and higher volatility. And that means investors will have to be prepared for that volatility. But conversely, if and when the volatility hits, it will also create opportunities. And you have to be prepared for that. And that means you have to be much more active. Just buy and hold, which was maybe the right strategy for the last 10 years, is not the right strategy in this very different world.
So an argument for active management. Not a surprise to hear that from someone over at PIMCO right now, Joachim. You'll let that joke just go to one side just for a moment. One thing in this report is on QE. And I think most people assume that QE, low rates and loose monetary policy, can keep financial conditions loose and generate excess returns in markets too. As you've pointed out, the experience of Europe and Japan says otherwise. Do you think that lesson applies to what we could experience here in the United States?
Yes, I think it does. So low yields, QE, are no guarantee for a massive outperformance of risk assets. We've learned that in Japan. We've learned that in Europe. The question is, why are yields low? If yields are low because the economy is not doing well, then that's not a great environment for risk assets.
And so looking ahead, the thing we worry about is that the secular rise in the share of profits in GDP, so the outperformance of earnings over GDP growth, which was the story of the last 20, 30 years, that is coming to an end. And the reason is that, well, the profit share has risen very high already. We are seeing deglobalization. There is a possibility of re-regulation for important sectors of the economy. Taxes for corporates may go up. And generally, there is this trend away from a focus on shareholder value to stakeholder value, right? So this is happening within corporations, and all of that means that the high earnings growth of the last 20, 30 years is not guaranteed for the future. So if that is the case, well, then we could move into an environment where, yes, bond yields are very low, the returns in fixed income are very low, but you're also not getting the outperformance in equities that we all got used to over the last 10, 20 years.
Welcome some huge challenges in the years ahead, and really enjoyed the read, the secular outlook out just now, and worth getting your teeth into. Welcome Fowles there on the latest from PIMCO. Want to head to the market desk now and get you some movers. Futures up 27. Here are the stocks to look at ahead of the opening bell. Here's Abigail.
Hi, John. Well, we are seeing a really nice bounce back for mega cap tech stocks, which had been under pressure yesterday, even prior to President Trump's tweet around ending stimulus negotiations with the Democrats. And a piece of that pressure on the day was news that came out after the bell, the fact that a House panel is recommending the breakup of some of the big tech companies. But today we have Apple, Amazon, and other tech stocks nicely higher, really recovering from that sell-off. NVIDIA, the chip maker, one of the big high flyers this year, up more than 130% right now, set for big gains, up 8 of the last 9 days over that time period, adding 13%. And then we have another day of rally, or yesterday we actually did not, but today we do have, at this point, John, the big banks recovering. JP Morgan actually just about flat there. Let's see whether or not those rising yields and risk on the banks a little bit more as the day progresses, John.
Abigail, thank you. Great to catch up. As always, Abigail sticking with us going into the opening bell. Coming up on this program, vice presidential candidates preparing to square off in Salt Lake City. That conversation coming up next with the RBA founder and CEO, Richard Bernstein. Next, right here on Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Live coverage of the vice presidential debate. That starts on Wednesday night at 8:30 p.m. Eastern Time on Bloomberg Television and Radio.
He knew it was a deadly disease,
What did he do? We've done a great job.
I know how to get the job
Well, you didn't do very well in swine flu.
Everybody knows he's a liar.
I graduated last in your class, not first in your class.
He's just afraid of counting the votes because
You're wrong. You're wrong.
It's hard to get any word in with this clown.
The question is, radical left.
Will you shut up, man?
Listen,
No,
the
answer to the question is no.
The presidential debate offering plenty of drama, little on policy. The attention now turning to the vice presidential candidates squaring off in their first and only debate tonight in Salt Lake City. The event taking on far greater significance with the president facing his largest deficit in the polls and just 27 days remaining until the election. Looking at where the money's going and where the polls are is Bloomberg's Scarlett Fu. Hey, Scarlett.
Hi, John. Well, this might be a tall order, but if you're looking for some more substance in tonight's vice presidential debate, look at healthcare because, of course, Vice President Mike Pence chaired the White House's COVID panel, and Kamala Harris probably sees that as an easy target. But really, the focus is all on stimulus, when it's coming, the form that it takes, and the prospect for it. And President Trump's announcement yesterday that he was suspending all negotiations between the two sides flipped a switch to risk off across asset classes. When you look at futures this morning, they've steadily made a recovery starting last night after a flurry of tweets on specific handouts to airlines and to small businesses. So this piecemeal approach has at least halted the sell-off for now. As for how analysts are gaming out the election, with Biden now leading in the polls firmly, UBS says a blue wave would mean more fiscal spending. Yes, Democrats would probably want to raise corporate taxes, but stronger stimulus would offset that, basically resulting in a neutral impact on markets. Barclays actually takes it a step further, saying that a Democratic sweep would lead to stimulus that would more than overshadow and offset their policy agenda. So in the short term, that would be risk on. Most scenarios out there do not favor the U.S. dollar. Kit Jukes over at SocGen told Surveillance on Monday that the U.S. seems to be refocusing away from equity and tech-friendly policies to measures that are more household-friendly. So that would lead to more deficit spending, which would be dollar negative. Goldman says a Democratic sweep would accelerate dollar weakness, while a Trump re-election would support the currency. And looking at gold, it's been left meandering here. The focus on some kind of stimulus deal earlier in the month had fueled reflation hopes. Higher inflation, of course, would favor gold. Retail interest, we know, in gold has been intense. Gold ETF holdings have been climbing to a record, as that white line indicates, but the price of gold has been really held hostage to the state of stimulus talks, which right now have degenerated into nothing. John?
Scarlett, thank you. As we count you down to the opening bell, snapshot of the price action just quickly. Equity futures advanced at about 0.75%. The 10-year yield higher, up 4 basis points to 0.7718%. We've talked about that asymmetric risk around the Treasury market. The good news generating a greater sell-off in Treasuries. The bad news not getting that huge rally that you might expect in previous years, particularly over the last couple of months. The other story I want to get to briefly, and I know traditionally this show is a Brexit-free zone, but let's take a look at sterling just very quickly. Headline crossing on Bloomberg, the UK planning to quit Brexit trade talks if no deal is seen by October 15th. We're reporting that right here at Bloomberg. This following a report suggesting that the European side would ignore that October 15th deadline. So the UK wants to recognise it, and the EU may well ignore it. Confused by Brexit, I'm sure all of you are. Cable lower, sterling against the US dollar, 128.67, are down about 0.1%. That's your Brexit load for now. Guy Johnson far better at it than I am. He'll pick up that story in about 40 minutes' time. Here's the story for your portfolio looking ahead. RBA's Richard Bernstein weighing in on the impact of COVID on the markets. Despite political rhetoric, the risk from the disease remains real. If more people get sick, more people don't go to work and more businesses close. It's pretty simple. The only way, the only certainty as we head towards 2021 is continued uncertainty. Lucky to have Richard join us right now. Richard, fantastic to get you with us on the program. It's such a huge challenge, a world of uncertainty, let's call it radical uncertainty, and I think the challenge of the moment is a better understanding of how to construct a portfolio for what you're expecting to come in a coming year. Richard, help us do that.
Yeah, so Jonathan, we are at RBA, we are really looking at a balanced portfolio right now between traditional defensive shares, things like consumer staples and healthcare. But then on the other side, we have things like energy, industrials, transportation stocks, material stocks, things like that. And I think, you know, you have Uber bulls and Uber bears right now. And of course, somebody's going to end up being right. But I think the question that a portfolio manager has to ask, is that a prudent way to manage money for clients? Do you really want to make a guess on the outcome here? What we've tried to do is have this balanced approach and adjust the balance as the fundamental data continues to improve. And if it improves more, then we'll become more cyclical. If it deteriorates, then you become more defensive.
So this year, Richard, a balanced portfolio, a diversified portfolio, the traditional 60-40 mix, has actually done pretty decently. The bonds portion did tremendously well. I think the long-term ETF, the long Treasury ETF, TLT, returning about 20% the last time I looked a couple of days ago. And yet exactly now is the moment when people start to question the 40 portion, the bond roll in a portfolio, and the traditional way we'd look at putting one together. Richard, what has changed for you?
Well, I think for us, first of all, I don't want to mislead people and make people think that we were out there in the 10-year and 30-year bond, because we weren't. We didn't have enough duration on our fixed income side, to be perfectly honest. But I think the thing that's reasonably encouraging right now, if you're a fixed income investor, is the steepening of the yield curve. I think that is a very traditional sign that people want to watch. And the steeper that it gets, the better the outlook for the nominal economy. And I think that recently it has started to steepen again. The 10-year has been selling off a little bit. And I think people should be encouraged by that. And I think that's a critical tool for the banking sector. It's a critical tool for lending. It's a critical tool for risk premia. All these type of things are going to filter their way into economy. Honestly, Jonathan, I have to tell you, I've been very confused by the Fed's actions, because the Fed has been flattening the curve when history says that what you want is a steeper curve to encourage private sector lending. That's not what they're doing, and you're seeing the commercial bank stocks lag as a result.
Loretta Mester of the Cleveland Fed earlier this week, Richard, suggesting that they could do what they did last time around and maybe move some of the buying to the longer end of the curve. This speaks to what you're saying, Richard. Can you build on why you think that is a mistake?
Yeah, look, the Fed is not supposed to be the economy. The Fed is supposed to be the backstop to the economy, the oil of the engine, you know, any kind of metaphor you want to use there. That's what the Fed's supposed to do. And what the Fed is actually doing is disintermediating the traditional banking sector. They're gaining market share away from the traditional banking sector by going out and buying bonds at the long end of the curve. To me, this is very, very confusing. They clearly think that the absolute interest rate is more important than the slope of the curve. But when history shows very clearly it's the slope of the curve that stimulates lending and stimulates that grease in the economy, I don't understand why they're flattening the curve. It just makes no sense.
So, Richard, a final question from me. I don't want to suggest that anything is uninvestable, but from your perspective, looking at your risk-on, risk-off barbell that I've been looking at right now, you went through your overweights and the particular sectors you would put in that. I'm trying to understand where banks fit in, given your concerns in the bond market.
Right. So you know, there's two things I didn't talk about there, Jonathan. One was banks, one was technology, and they're almost the opposite ends of the spectrum. If you think that banks are going to work, you don't want to hold technology. If you think technology is going to work, you don't want to own banks. It's almost the opposite extreme on either side. Look, I think the way to answer your question is to say people should watch the performance of NASDAQ versus the Russell 2000. If NASDAQ is outperforming, that says that the market's implied forecast is extraordinarily bearish for the economy. Only a few companies can grow. If we see the Russell 2000 outperforming, it says there's a broad leadership in the market. The economy is going to be okay. I don't think most people understand that, and banks would go along with that broader leadership. So if you're in the Fab 5, those 5 or 6 technology stocks, you have to realize that your implied economic forecast is extraordinarily bearish. I don't think most people understand that.
Richard, great to catch up, and a valid point, sir. We'd love to get you back on the program soon. Richard Bernstein there on This Market. Coming up, the analyst action you need to know ahead of the opening ballot on morning calls. Then later, we'll talk about the big tech names facing dramatic reforms to curb its power. JP Morgan's Jack Caffrey joins us at the opening bell for more. 7 minutes away from that cash open. Equity futures up and looking good. Futures rallying. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Five minutes away from the opening bell. Equities up nicely for the equity bulls at least. Beautiful morning in New York. Up 28 on the S&P 500, advancing 0.8%. That's the price action. Here are the morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with JP Morgan. Upgrading JetBlue by 2 notches, raising shares to overweight from underweight. The analyst citing effective cost controls and a favourable risk reward. Second call, Jefferies upgrading Workday to a buy, 260 price target. The analyst seeing multiple options to drive long-term growth and sustainable margin leverage. Your third call, your final call, from Pivotal Research, raising its Netflix price target to a street high, $6.50. The analyst expecting the company to remain the dominant global streaming player for the foreseeable future. That stock up by about 2.4% ahead of the open. Coming up, much more on big tech. A House antitrust panel seeking to rein in the giants of Silicon Valley. We'll get the view of JP Morgan's Jack Caffrey next on Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Wednesday morning, equity futures rallying up 28 points, advancing 0.8%. Your outperformance, believe it or not. Nasdaq futures up 1%. We'll talk about big tech in a moment. Switch up the board 15 seconds out from that cash open. We look a little something like this in a bond market. Treasuries down, yields higher at 4 basis points to 0.7752%. Couple of basis points away from the week's high of yesterday's session, just approaching 80 basis points. In foreign exchange, the outlook for the European economy getting cold water frozen on it. Freezing cold water poured all over it in the last couple of weeks. Euro-dollar still 117.72, up about a third of 1% there. And crude has been choppy over the last week. 39 handle down to 39.70 and off by about 2.3%. That's the cross-asset price action 20 seconds into the open at the market desk. Back with us, here's Abigail.
John, let's start out with the airlines, which are popping higher. This, of course, after President Trump recently tweeted about individual stimulus packages, and for aviation, $25 billion. So on this, we see investors, traders hopeful, with both American Airlines, Delta, and others, in fact, trading higher. And we now have the bank sharply higher, too, up 1.5%, briefly dipping lower around 9:10 this morning on a headline about overdraft fees, quickly reversing that, trading in line higher with yields up, fitting the risk-off tone as bonds sell off. Now, another group that's doing pretty well, John, is technology, the fourth best sector group, up 1.1%. Apple, Amazon, Google, all higher. This, of course, yesterday, lots of weakness for these big tech names in anticipation of what came out after the close, or a House panel calling for the breakup of big tech. We see Facebook just about flat. But the fact that you have most of these stocks higher, John, tells you that this idea is not new. We've had it floating around for a couple of years, and it's probably not happening anytime soon. Certainly not a 2020 event, with these stocks, again, popping higher on the morning. One of the best industry groups here as we trade on this Wednesday morning, John.
It's a valid point, Abigail. It really is. That has been the story over the last several years. About 90 seconds in, the S&P 500 up a little more than 1%. Abigail pointing out how well IT is doing. Information technology up about 1.25%. Every single industry group, every single sector advancing this morning. Materials, consumer discretionary, industrials, financials, top of the pile. The bank's getting a helping hand from the bond market over the last couple of days. Big tech very much leading the early gains this morning then, but under fire in D.C., as Abigail points out. A House panel proposing reforms to curb the power of the four largest U.S. internet companies, saying the economy and democracy are at stake. Writing the following: underdog startups that challenge the status quo have become the kinds of monopolies we last saw in the era of oil barons and railroad tycoons. These firms have too much power, and that power must be reined in and subject to appropriate oversight and enforcement. Bloomberg's Scarlett Fu has been following the story. Hey, Scarlett.
Hi, John. Yeah, 16 months, 7 hearings, and 450 pages later, the House panel is making some broad recommendations to Congress. Here's what it wants. It wants legislation that bans these companies from owning different lines of businesses, which would entail breaking them up. Also, beefing up existing antitrust laws and curbing future acquisitions. And in the same way that you can keep your phone number when switching telecom carriers, give consumers the ability to move their personal data between services and platforms. Now, the big four tech names largely operate in different digital businesses, but years of expanding from hardware to software and vice versa, and buying out startups allowed them to enter new markets and diversify their business, and as you can see, grow a lot faster. Facebook's revenue jumped almost 200% in the past 5 years. Investors certainly rewarded the stocks, sending them to new heights that pulled the NASDAQ 100 and S&P to new heights. Even with the sell-off in big tech over the past month, the NASDAQ 100 is at greater risk of a correction because it is much more extended relative to its long-term trend line than the S&P 500. So, bottom line, tech is much more at risk if stocks were to recalibrate and return to their long-term trajectory. Of course, John, this is Congress, and even with both Democrats and Republicans having issues with big tech, they don't see eye to eye and can't see eye to eye. Democrats led the panel's investigation. They want to overhaul antitrust law. Republicans also have their issues with big tech. They accuse big tech of bias against conservative voices on their platforms. So, stalemate. And even if the Democrats were to take Congress and you would have a Democratic sweep, Republicans would still be in a position to block any kind of tech legislation. John?
Scarlett Fu, thank you. All valid points once again. Scarlett Fu on top of this story over the last couple of days. Investors growing increasingly cautious on tech as its outperformance begins to wane. Morgan Stanley, Mike Wilson, out front on this over the last couple of months, expecting mounting interest rate angst to carve out a rocky path for the high flyers, writing the following: the risk for rates to move higher in a non-linear manner is greater. By definition, that increases the risk of a move lower in those assets most tied to long-term interest rates. Such a risk is underappreciated in our view. JP Morgan's Jack Caffrey joins us now over the phone. Hey, Jack, always great to get you with us on the show. I just wonder, the biggest risk for tech right now, is it fiscal and higher rates and not regulation?
Well, I think you point to the biggest risk in the shorter term is certainly a broadening of confidence in the economic recovery. If we look at what's working today, material stocks, discretionary stocks, within technology, it's the semiconductors that are doing better. So there's some real confidence, it seems, in the market that we are going to get to a broader expansion. And I think that can result in some money leaving some of these higher growth, secular growth situations. And I think that weighs not just on tech, but it weighs on communications. Because let's remember, a lot of those FANG names are not actually considered technology stocks anymore, but wind up in a smaller, different sector that people tend not to talk about as often when you think about risks in the market.
Jack, it's a good point. One thing that you've said is focus on the fundamentals. Recessions cause bear markets, not politics. But I don't want to get too cute about this, but in this particular situation, the politics do matter for the shape of the recovery around the fiscal plan. How do you navigate that at the moment, Jack?
You know, in the very short term, unfortunately, I think we wind up being more reactive than we want to be. And I think that's where we try to come back to, let's talk about the fundamentals. The fundamentals are the employment picture is getting better. The consumer savings rate rose thanks to stimulus checks, you know, a political reality. But you wind up with the consumer having more dollars in their pocket. As a result of those more dollars in their pocket, they're more confident than you might have thought they would be for the levels of unemployment we're looking at. And when you start thinking about, well, is the consumer acting on that, the consumer is certainly in a better position. You look at mortgage applications up today, a housing market doing exceptionally well. You know, the confidence weakness, if there is it, winds up being more in the corporate sector, where you see falling demand for commercial and industrial loans. And I think you pair that against, you know, better trading, better activity, more confidence in the PMI. I think the corporate sector actually comes along, and they're going to be let out of this recession by the consumer, as we saw the last time around as well.
Jack, when you say bad headlines don't necessarily mean bad markets, what do you mean by that?
It's effectively this idea that we'd like to talk about the markets being able to discount factors, be able to discount where the world winds up going with. But at the same time, you know, yesterday's rally or yesterday's trading activity seemingly was built on the idea we were going to get to a stimulus agreement, and then one tweet later, that the hopes for that stimulus agreement in the short term were dashed. Market sells off 1.5%. You know, that was a negative headline. Market closes, and then you start getting a revision to the tweets, effectively talking about, well, how can we move forward with more targeted stimulus? And now you see, say, you know, in the very short term, airline stocks responding very positively to the perspective, to the prospect of getting relief. And so lacking a crystal ball on what news item is going to hit at what moment, you know, markets in the very short term are very reactive. You know, an efficient market hypothesis person would tell you, they're discounting, you know, changing fundamentals, or they were just surprised. You know, you go either way with that one. But since you can't predict news flow, you come back to which way are expectations biased. And frustrating as it is, the more uncertain the environment, the more likely expectations are more reasonable, more likely to be beaten. And it's when we think that you have high confidence or almost certainty in a particular outcome, then markets are most likely shocked. Again, coming back to yesterday.
Let's talk about, Jack, this is really important. Let's talk about how active you should be when it comes to things like rebalancing. I'm sure you're familiar with that mythical Fidelity study. I call it mythical because it's not clear it ever happened. But the story goes that the best performing accounts over a long period of time belong to the people who are no longer with us anymore, Jack, because they hadn't been touched. How much time do you spend just in therapy with clients telling them, don't do anything?
Well, I mean, ultimately, I think the highest value that an advisor can have with their client is trying to prevent them from overreacting to news, which is to sit there and sometimes it's a function of saying, you know, we've had a great year relative to what you were expecting, and maybe we should take some chips off the table, merely because it's very emotional to think that when markets are rising that you don't need to rebalance. Alternatively, you know, clients who were sellers in March have had very negative experiences, and they curse the day that they sold, and they curse the fact that the market has moved, and they keep waiting for pullbacks in order to get engaged. And that generally keeps pullbacks ultimately much more shallow. And so, you know, human nature is not necessarily easily wired for responding to markets in a short-term basis. And so the value, I think, of working with an advisor is helping to try to tamp some of those emotional highs and lows, and trying to impose a little bit of discipline around the rebalancing discussion to make it more of a consistent process and less of an emotional process.
Jack, smart conversation. Sensible one too. Jack Caffrey, appreciate your time, sir. 10 minutes into the session, equities advancing. Every single sector on the S&P 500 in positive territory. On the S&P this morning, up by about 1.1%. The bank's doing okay. The wires in the bond market over the last couple of days, yields up 4 basis points to 0.77% on a 10-year. At a market desk with your movers, back with us. Here's Abigail.
John, we have a number of stocks to take a look at that are moving in the direction of the markets or popping higher. Let's start out with the shares of Eli Lilly, as the company is seeking emergency authorization for its COVID therapy. This, of course, has come after studies that it has proven reduced hospitalizations, but you also have to wonder whether or not this has something to do with President Trump's recently taking Regeneron's antibody cocktail and the possibility of some sort of emergency authorization there, wanting to make sure that they're in the fray. The Gap is also trading higher as Barclays has upgraded the stock by 2 notches to an overweight from an underweight, setting a $20 price target, so investors like the fact that a bear is out of the way. Levi Strauss higher on a very strong quarter, much better than expected. Low expectations, their e-commerce business really jumped. And then finally, Square is popping up 3.8%, and this has to do with another tweet from President Trump and his offer for that $1,200 check. Their direct deposit unit got a bump on the other rounds of stimulus, so investors thinking perhaps that would happen again if that check were to come. Big if there, John.
Abigail, big if, thank you. Coming up, calls for additional fiscal stimulus creating division within the Federal Reserve. That conversation's still ahead with Clear Harbour's Aaron Kennan. We'll do that next. In the markets right now, equities bid. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? 2 perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
$14 minutes into the session, we had some weight to the S&P, up by a 1.26% on the S&P 500, up by around about 1.4% on the Nasdaq. A nice rally this Wednesday morning. The session is young, but we do have a bid in the equity market. Markets looking ahead to the Fed minutes following Chairman Jay Powell's push for more fiscal stimulus.
At this early stage, I would argue that the risks of policy intervention are still asymmetric. Too little support would lead to a weak recovery, creating unnecessary hardship for households and businesses. Over time, household insolvencies and business bankruptcies would rise, harming the productive capacity of the economy and holding back wage growth. By contrast, the risks of overdoing it seem, for now, to be smaller.
Bloomberg's international economics and policy correspondent, Bloomberg's Michael McKee, joins us right now. Mike, the substance of the message, not new. The delivery and the boldness yesterday, I would say that was a little bit of a shift from the Fed chairman. Your take, Mike?
Oh, absolutely. It was the clearest call he's made yet for additional fiscal help, which is why I don't think we'll see a lot from the minutes today. I mean, the market sold off yesterday when Donald Trump tweeted he was walking away from the negotiations, and we're up today because then he tweeted again that he might be willing to accept some standalone bills. In a market that changes on a tweet, what good are 3-week-old minutes of a meeting going to be? Not a whole lot, I would argue. One thing that Wall Street is going to look for today, however, is how divided the Fed might be over the framework language. We kind of know that already. We had 2 dissents. Since September 16th, we have had 48 Fed speeches. There are 6 more today. 48 Fed speeches, including 4 by Chairman Powell, 5 if you count his post-meeting news conference. So they aren't leaving us in the dark. We know the 2 dissents were over the language in the statement, and we know that St. Louis Fed President Jim Bullard thinks maybe we have enough stimulus. He seems to be the only one on the Open Market Committee right now. I guess the thought is there may be some kind of formulation in the minutes language of a few, some, many, that would suggest there's enough division out there that when the Fed eventually raises rates 2 or 3 years from now, it might come a little faster. And for that, you would watch the financial conditions indexes to see if they tighten a little bit. They have been tightening a little bit, but it's still well below zero, still fairly loose out there. The other thing that the markets might look at is the weighted average maturity of the Fed's portfolio. They're very heavily weighted to the short end, and there's some expectation they may want to term out and go longer in future meetings. So they'll be looking for some kind of talk about that. I guess what I'd be interested today in, John, is any talk about financial instability, the idea that we're seeing sort of play out today, that markets are just going to always go up because they always feel the Fed is going to have their back.
That is one view that many people share. Michael McKee, thank you. Clear Harbour's Aaron Kennan saying markets are depending on the Fed to prop up the economy, writing, quote, expectations of further stimulus persisted over the summer, but brinkmanship on Capitol Hill has since turned investor attention back to the Federal Reserve for a sense of solace. Joining us now is Aaron for more. Aaron, fantastic to catch up. Thank you very much for coming on this program. What is next from the Federal Reserve, given what we've seen already in the last 8 months?
Right. I think the tools that the Fed have at their disposal, they clearly used in a significant fashion back in March, Jonathan, where they essentially looked at the capital market structure. They looked at where credit spreads had gapped wider. The municipal bond market had certainly been quite wobbly back in that period. And they expanded their balance sheet. I think what we heard yesterday from Chairman Powell was, okay, credit spreads are tight. Almost every major fixed income asset class is now actually up on the year. We're doing our job, and we are not, through our mandate, able to send checks to the American people, particularly those that are unemployed in the airline industry and the hospitality industry. So, wake up, Congress. If you want to assist that part of the economy in those people, we do not have the power to do that. And I think that's what we heard from the Fed yesterday.
Well, Aaron, what do you think about financial conditions and the extent to which the Federal Reserve alone can keep them loose?
Well, they can provide liquidity through the capital market system, and they've done a wonderful job on a year-to-date basis in the midst of this crisis doing that. But certainly, their powers are limited. Don't fight the Fed is certainly something that I think is worth hearkening back to. I certainly wouldn't want to fight the Fed here. They have lots of tools. There's talk that if things got really ugly for some reason in the economy, that they could even perhaps buy equities. They're not doing that, but they were close when they started buying crossover, or had the ability to buy crossover high yield product. So the Fed has a lot of power and a lot of influence, but at the end of the day, again, I think the fiscal tools are required now to address and identify the problems that require addressing here going forward. PPP ran out in July. The top up and the unemployment insurance of $600 a month kept incomes nicely elevated over the course of the summer and into the fall, and that's running out. And now the question is whether or not, of course, the administration and Congress can sit down and work something out. And we're seeing that tit for tat over the last 24 hours.
Fiscal headline roulette, and I'm not sure you want to play that game with me right now, so let's not. The story beneath the headlines is arguably the story that I think has got everyone's attention, including yours, Aaron. It's been described as a K-shaped recovery. The limits on the one part of the economy, the acceleration we've seen in the other. How sustainable do you think that is, Aaron?
Well, it's interesting, Jonathan. I think if you look at the underlying sectors in the economy, it really speaks to what you're talking about there, where you have the cyclicals in industrials and energy and bank segment of the market really under a lot of pressure, particularly banks and energy this year. Energy's off 50% within the S&P 500. Banks are off 20%. Loan growth is nowhere to be found. And then you sort of look at, well, the technology sector. Why is technology up over 25% year to date? Well, the one area of economic growth that, hopefully, I think everyone's holding out for all hope that we can see a nice pop is in the area of productivity. We have an aging working cohort, so we're not going to extract growth from our workers. It's going to have to be productivity gains, and which sector of the economy is going to really provide those potential tailwinds to productivity gains? We think it is technology. Now, of course, the question that we harken back to from a fundamental level is technology is relatively expensive relative to cyclicals, but we think justifiably so.
Well, Aaron, one thing I know you're touching on right now is the dispersion and variation between sectors and size as well. It's something you speak to, you put out in your note recently. I just wonder, beyond tech, Aaron, how you invest around some of these themes.
Absolutely. I mean, we believe that every client has a different risk profile and a different objective on a long-term basis. But within the equity market, we think there are wonderfully managed industrial companies. We think that there are certainly staples that need to be purchased. We are looking for great management teams, first of all, that are in sectors with wide moats across multiple segments of the economy. We're also looking at the correlation of sectors to one another. Last year, we had all sectors up at the same time. This year, we're seeing dispersion across sectors. So, you take a look at utilities. I mean, in the midst of this moment, we still are seeing unit growth at the water utility segment of the utility market, for example. We're still seeing nice mid-single-digit return on equity within the water segment of the utility marketplace. And so in the midst of this sort of uncertain moment, we think that certainly sectors outside of technology still make sense.
Aaron, I'd love to get you back on the program soon. I really would. Fantastic conversation and great to hear from you. Aaron Cannon there on the latest in this market. Let's get to the markets right now, shall we? About 22 minutes into the session, equity advances up by 1.26% on the S&P 500. On the NASDAQ, up by about 1.36%. So we have a rally, and in the bond market, we have a sell-off. Yields up, curve steeper, up 4 basis points on 10s, up about 5 on 30s. Next up, the trading diary, your week ahead, right here on Bloomberg.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Equities bouncing back. Try and keep up with this market over the last couple of days. Fiscal talks on, fiscal talks off, fiscal stimulus plans post-election, a mini offer, a skinny deal. Been doing this for months, haven't we? The S&P 500 up by 1.3%, the Nasdaq up by 1.4% in the face of more talk about regulation down in DC. That's the equity market. Here's the trading diary, what you need to be watching through the rest of this week. We get the FOMC minutes later today at 2 p.m. Eastern, plus Fed Presidents John Williams and Charles Evans, both discussing the outlook for the U.S. economy. Later tonight, it's the vice presidential debate from Salt Lake City at 9 p.m. Finally, on Thursday, we get another round of U.S. initial jobless claims. That's your week ahead. From New York and the City of London, this was the countdown to the open. This was the open, 26 minutes in. Equities up 1.26%. The conversation continues. Catch me on Twitter at FerroTV. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Okay, guys, I'm placing an order to sell British pound at 128.72.5. Yeah. Okay, it's a stop on profit. Stop position. Yeah. Short position I opened a while ago at 128.775. The order placed to stop basically at 128.725.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. GBP.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
I close position on British pound at 128.72.5. Have £500 in profit